Of Silicon Valley Bank.
Silicon Valley Bank.
Rapid how quickly this bank went into total
in
collapse.
The banking
California
world,
regulators
the FDIC
have just shut it
reported
down.
that California
It's now the
regulators
biggest
shut down.
This Friday, on March 10th, 2023, Silicon Valley Bank collapsed under what is the second largest bank failure and the largest bank run in US history. Alright, so what's a bank failure and what's a bank run? A bank failure is when a bank fails to perform its job, giving customers money when they try to withdraw money. A bank run is when a large number of customers try to withdraw their money at the same time. And in the case of Silicon Valley Bank, their collapse was caused by a bank run. And you may ask, well, why don't they have enough cash to give to customers? Well, in most banks, when a bank run happens, they simply don't have enough cash on reserve to meet the withdrawal demands of all their customers. You see, when you deposit your money at a bank, the bank doesn't just keep it in cash. They use that money to make loans to other customers, or they use it to make investments. And they keep a portion of it in cash so that when you do ask for it, they can give it to you right away. So Silicon Valley Bank, the go-to bank for venture capitalists, entrepreneurs, and tech-related things, the 16th largest bank in the US, and also a bank that's just involved in over half of US tech and bio ventures, just went poof. Wait, so what the hell actually happened, right? All right, let's get to the facts. So Wednesday, March 8th, 2023, Silicon Valley Bank releases a statement about their recent financial activity. And there's two key pieces of information here. One is that Silicon Valley Bank is going to raise over $2 billion in cash. And the second is that they recently sold $21 billion of securities at a $1.8 billion loss. So these two pieces of information started to raise some eyebrows and create a crack in the trust that their customers had in the bank. Why does the bank suddenly need so much fresh capital? So it's Thursday, March 9th, 2023. When the stock market opened for the day, Silicon Valley Bank stocks had dropped by 40%, and chaos erupted and the bank run began. Prominent venture capitals like Peter Thiel's Founder Fund and Union Square Ventures is known to have instructed their founders to withdraw their money from the bank. In total, on Thursday alone, customers withdrew a total of $42 billion, nearly a quarter of all customer deposits. To put that into perspective, the largest bank failure in history was caused by a bank run that lasted 9 days with a withdrawal amount of $16 billion. Silicon Valley Bank had $42 billion withdrawn in a single day. So by the end of the day on Thursday, Silicon Valley Bank had a negative cash balance of over $900 million. It's Friday, March 10th, 2023. SVB stock drops a further 40% in pre-day trading, and trading is halted. The Federal Deposit Insurance Corporation comes in and swoops Silicon Valley Bank up. And just like that, the 16th largest bank in America has now collapsed. Like, to me, this is just a fascinating story because of the scale and the speed at which this just happened, right? Let's talk about bank failures. Since COVID-19, there's been 4 bank failures, including this one. The other 3 are the First State Bank, First City Bank of Florida, and Alameda State Bank. Note how small these banks were. Cumulatively, there were less than 0.3% of the customer assets held by Silicon Valley Bank. And to add to that, all these banks had financial problems that led to the failure of the bank. So the situation is quite different now. Not only was SVB magnitudes of scale larger than the banks that failed in the recent years, it also failed without having severe financial problems. So let's look into it and look at the 4 recipes that caused the disaster that ensued this week. The first is rising interest rates. SVB has a higher exposure to rising interest rates compared to other banks because of their large investment in bonds. And bond prices in the short term fall when interest rates rise. Ta-da! So for reasons unknown to us, SVB, when they liquidated their most recent assets of $21 billion, they sold it at a loss of $1.9 billion. The second is a communication. SVB detailed their plans to raise capital without much effort put into detailing why they were doing it, which started to raise some concerns. And to make matters worse, on Thursday when the bank run was rampaging, the CEO came out and told the customers to stay calm. Now, is there anything worse that you can say in a time of panic? I don't know. The third is timing. As luck would have it, Silvergate, which is known as a bank for crypto, announced its plans to liquidate this week. Doesn't really help SVB much here. And lastly is SVB's namesake, Silicon Valley. Silicon Valley Bank has long prided itself in being the go-to bank for venture capitalists, for entrepreneurs, for tech people. And the thing about the tech world is that it's very interconnected and everyone is online. So when venture capitalists started to instruct their founders to withdraw their money, panic started to ensue, especially on Twitter. A lot of tech-savvy customers rushed to get their deposits withdrawn. Here's the interesting thing though. If nobody had withdrawn money, if nobody had done anything, nothing would have happened. SVB would have been just fine. But because people started withdrawing their money out of panic, out of fear, it was already too late. And at that point, it just becomes a self-fulfilling prophecy. So what's next? What's next for SVB? What's next for SVB's customers? And what's next for tech? Well, don't take my word for it, but it's pretty likely that most, if not all, of Silicon Valley Bank's customers are gonna get their money back. FDIC will find a way, whether it's getting another commercial bank to take over SVB's assets or finding some way, they'll figure it out. Silicon Valley Bank's collapse might lead to another to rise to fill its spot. Maybe it's a startup that provides financial services, like Brex, who received billions of dollars in deposits on Thursday when the bank's run was happening. Or maybe it's another bank. Maybe it's a bank that acquires Silicon Valley Bank, if that happens. Well, one thing's clear, and it's that startup financing won't ever quite be the same again.